we look at Facebook, I mean, one should probably apply a rule as one does in other stocks that have fallen apart, you know, down 20% in one day is a huge correction. People typically would say, look, you give it about 3 days for bad news to wash out of a stock. Obviously, let the institutional holders who hold the stock in size clean out their portfolios. At the same time, we do seem to have a very strong inflow into the stock coming from retail investors, according to numbers coming out of Fidelity last Friday and then probably again this morning. But one would argue that in case of looking at Facebook, you still have a company here whose chief operating officer, Sheryl Sandberg, is scheduled to go before the Senate Intelligence Committee in September to testify about election meddling. You've got regulatory scrutiny and oversight here for the company, which I think is probably going to limit their growth and probably cause them to change their business model to a less profitable one, which certainly is going to limit the bounce in the stock.
So that sounds like it is definitely not a screaming buy.
Well, you know, we saw a strong reaction in the stock when the first news had come out back in March and the stock had fallen off precipitously and we had seen it break back up to record highs ahead of this news coming out. You know, obviously there's a big reserve of belief in Facebook, but we would argue here that, you know, the tide is turning as far as the company is concerned. The same thing for Twitter. And that as a result, we might look at the social media stocks as being kind of a special subset that tech investors should probably give some distance to until we get a bit more of an all clear.